When it comes to trading higher time frame, like you said, that could be 1 to 2 weeks worth of price action before it delivers into your POI. One, you can't be waiting that long to execute a position. Two, price doesn't always fill in that inefficiency on the higher time frame. So it's what's in the lower time frame that's quite important, because you can trade to that discount or trade to that premium.
A lot of things can be solved by technical competence, and that's just time in the game, as opposed to what I see traders doing is bounce from technical strategy to one to another. Nothing really sticks for them, so they scapegoat the whole situation and say, must be my psychology. It's one of the biggest debates in the trading community. Some people say trading is 99% technicals, others say trading is 99% psychology. Where do you fall on that spectrum of technicals versus psychology?
Back in the day, I would say I was 80% psychology and 20% technicals. Now it's completely different. Now I would say it's, when it comes to trading, I don't want to be too psychologically involved in the market. I want to have my rules set. If price ticks off my boxes, I'm in. And if it hits stop loss, if it hits take profit, I'm in and I'm out. As for the higher time frame approach, I'm holding that position. I don't know what the position is doing halfway through me being in the middle of something else. And then at the back of my head, it's like, oh, checking your position. Are you happy with the returns? Oh, consider closing it, partialing out, de-risk.
When it comes to fundamentals, technicals, supply and demand, all of these kind of things, well, what are the most important things to focus on?
I have something called the 5-minute strategy. Now, this is a gem I'm about to drop, guys. So if you want to backtest it, go ahead and do that. But what I do is...
Hello, ladies and gentlemen. Welcome back to another episode. We're joined by Zain, ZM Capital. You've probably seen him around. First of all, I want to start off and say, how old are you, my bro?
20 years old.
20 years young. And yeah, I mean, just right now, before we started rolling, we were speaking about properties you're in. And needless to say, you've achieved a lot for your young age. Well, because my brother's 20 and right now he's just at uni doing his thing. But yourself, I see you out, creating your life at a young age. So just to briefly tap into your story, because I know you've said it publicly before. When did you start trading?
Honestly, this goes back to when I was just before I turned 15. So this is year 10, high school.
Okay.
Little backstory. I was in high school, sitting at the back of my maths class. I see a friend of mine sitting right beside me saying, yo, Zain, I just made 100 quid. I'm like, hold on a minute, what do you mean you made 100 quid? Took out his phone. I see a bunch of blues. It was his MT4. I was like, bro, what's going on? It's just like alien language. What's going on? He's like, look, just look at this. It says £100. I was like, oh shit, he made £100 while sitting in a maths class. I'm clearly doing something wrong. And at that time, I was into e-commerce. I was buying and selling on eBay.
Okay.
So anyways, he was a very, very good friend of mine at the time. And I ended up going home the next day, jumped on call with him. He introduced me to the basics of it, introduced me to what the markets was, what Forex is. And yeah, from there, 5 years down the line, we are where we are now.
There we go. And if you could very briefly describe the way you trade in just a couple of sentences, so I can have a reference of where to take this conversation on what your strategic approach is.
So I just trade supply and demand, quite straightforward. I just trade price action, really, truly.
Would you ascribe to a particular school of thought, be it a ICT, SMC, or
supply and demand? Honestly, like smart money concepts in my eyes is supply and demand.
Okay.
So yeah.
So if you were to talk me through a trade, I know you just were taking GU sales, which I'm also in.
Yeah.
What would be your thought process? Would you go from top down analysis, higher time frame down, or do you start at M15 onwards because you are more intraday?
This is going to be quite confusing because I have two different systems. Now, when trading higher time frame to trading lower time frame is two different things, two different entry models. Okay. Now I'm going to go through, for example, today I took gold longs and EU longs. All right. Okay. Now, I had a brief conversation about this to you back in when we were in Blue Waters. I don't know if you remember. I have something called the 5-minute strategy. Now, this is a gem I'm about to drop, guys. So if you want to backtest it, go ahead and do that. But what I do is the first hour of each session open, I mark that out as a range. Okay. So for example, London session would be 3 to 4 a.m. New York time. That would be the first hour of London session. I would mark that out as a range. And then what I'll do is following on the 5-minute time frame is once price breaks out of that range, either bullish or bearish, with 80% probability, price is most likely going to continue in that direction with the high and low being protected. So for example, let's just say in the first hour of London session, the range was created. And then the following 5-minute candle closes bullish outside of the first hour's range. As soon as the price closes bullish outside of the range low is a strong low. So I don't see price coming down and breaching this low. Does that make sense?
Regardless of what it did to Asia range. For example, if we have Asia range consolidation, it spiked out and went down. So we've had a bearish London window that you have. Then you look for a bearish candle on M5 and you'd sell, protecting yourself with London high.
Exactly.
Okay.
So that's one way. For example, my probable setup would be London opens. The first hour range is created after it takes out the Asian high. And then as soon as the first hour gets broken bearish, we then wait for the pullback into the first hour range, find a supply there, and then short down into Asian lows. That for me is an A+ setup.
And would you have an invalidation, for example, if it's already swept Asia low, assuming that Asia high model?
Yeah. So for example, there's a lot of instances where first hour of London takes out the Asian high, and then as soon as the 5-minute candle opens on the second hour, it comes down to take out Asian lows without giving me that pullback into my level. That completely invalidates the setup once the Asian low is taken out. But before Asian low is taken out, as soon as I get that pullback into that supply or that first hour range, I'll look to sell off into the Asian lows.
It's an interesting one. Let me say some things and correct me if I'm wrong.
Yeah.
I imagine with this kind of model, you're not using specific lower time frame confirmations. You're not coming back to a order block or an imbalance or anything. It's
and that's why I always refer to as soon as we get that candle closure. So for example, in today's scenario, this was without using the Asian session model as liquidity. For example, today, London session broke bullish against the Asian high, as you saw. And then against the first hour, it also broke bullish. So as soon as I had that confirmation of buying up EU, as soon as we got that pullback into demand, it was a breaker block to be specific. We got a pullback into a breaker block. I waited for a 2-candle rejection from that breaker block. Market executed on the 3rd candle open and targeted previous highs.
Why on some days do you do it on the first M5 candle in the direction, and today it was 2 or 3 candles later?
No, so where you're getting kind of confused is the break outside of the range is my confirmation if I'm buying or selling.
Okay,
the entry range hasn't happened yet.
So if it's a bullish range or a bearish range, that's not your bias. It's what happens after the range is made.
Exactly.
Oh, okay.
So once the range is created, I then see if price is going to break bullish outside of that range.
Got it. Okay.
Or bearish outside of that range. So in today's scenario, it broke bullish outside of the first hour's range on EU. Once I had that confirmation and knew I was buying EU, then I looked for my areas of demand, the breaker block, for example, wait for that pullback into that level, 2-candle rejection, market executions on the 3rd candle open. Okay. And we brought it up into the highs.
So out of the dozens and dozens of prop firms that exist in the whole space, who can we really trust? Whether they use slippage, whether they use types of drawdown, unrealistic trading conditions, every single prop firm has hidden tricks. So after thorough research and speaking to a lot of traders, Alpha Capital is definitely the best prop firm in the space. So apart from their no commissions, low spread, no slippage, great reputation, never denying a payout, because you are a Titans of Tomorrow viewer, you get a special discount on every evaluation just using the link or using the code TOT for Titans of Tomorrow. And you have a stop loss cutoff point. For example, I'm speaking on EUGU because that's usually what I trade. That first hour volatility can be at times just 5-10 pips. At times it can be 20 plus pips that first hour. So then it has the breakout. Would you have then a 20 pip stop loss, or are you having a range?
So within that range, there's usually a supply and a demand left within that range. And I would mark out that supply and demand, have my stops slightly below the supply or the demand, depending on the scenario. But in today's case, we entered from a bullish breaker block. As soon as we got that candle pullback, that 2-candle rejection, market execution, stops below the breaker block. Okay. So not the whole entire first hour range.
So are you averaging then probably, let's say, a 10 pip stop loss on an EU or GU?
Yeah, give or take 5-7 pips.
Okay, it's still fairly sharp.
Yeah. As for risk to rewards, usually around the 1 to 3 mark.
Yeah, I was going to say the session volatility being probably 20 pips thereafter, 20 to 30. You're going a 5 pip stop loss. You could probably hit around 1 to 3, 1 to 5.
Exactly. Yeah.
And your exiting protocol on this strategy, it's a fixed one, or it's based on the next supply or demand?
Yeah, it's based on inefficiencies, based on where I see liquidity resting. But usually I just identify where inefficiencies are in the market and I look to target based on that.
Okay, I've got 2 questions, but I'm liking this. Number 1, when you have your exit protocols, you're basing it on a reversal point, a liquidity pool or inefficiency or so forth. And day to day, that will vary. So your TP levels will naturally some days be 1 to 5, some days 1 to 3. Yeah. And that's exactly what I was doing for the first 5 years, 6 years of my trading. And then I switched it to a fixed model, which I don't know if you're aware of.
I remember you telling me that.
Yeah, when it comes to this, have you found a strategic advantage in allowing that discretion and not taking to a fixed approach?
Honestly, I've never tested sticking to a fixed approach. I mean, on average, usually my setups vary around the 1 to 3 to 1 to 5 region. So I'll say it's already quite fixed because that's usually the constant risk to reward I end up getting. So yeah,
I guess then there's no really need because you have a form of consistency. I think the reason I wanted a change to fixed was because some days it would be a 1 to 3, another day it would be 1 to 20. And that huge swing
you
was...
See, I haven't had a 1 to 20 in a very long time.
Myself neither now because I cut it off. But do you look at... Because I know a lot of people do this. I started to do it, then I stopped doing it. Was looking at the average daily range and the average session range. So if you know the last 50 days on EU was the London... The second hour you're trading is usually 20, 30 pips. Putting a TP aligned with that. Is that something?
I've never looked at the average of each session. Okay. No, I haven't really.
Awesome. Well, I like that model. And visually I can see how it would work and why it makes sense. Why have you decided not to take, because I know you probably used to do this, lower time frame models, or let's say an M1 break of structure to confirm the entry? Why are you now doing the on the candle closure?
Based on my testing and the data that I've collected, I need price to break out of this first hour's range, because based on the data that me and my friends have collected, and the person that introduced me to this model, he's had 20 years of data based on this exact system.
Okay.
So when price breaks bullish or bearish against the first hour's range, that confirms the high and the low for me. And if, say, for example, in today's scenario, EU closed bullish outside the first hour's range, I knew that this low is strong. So this is now the range that I'm working with. Once I have this range, it's a lot easier to approach the market with better confirmation, knowing that this is the protected low. So this is the range that we're now working with. But without that break of that first hour, the low or high isn't strong, and it doesn't give me that confirmation that, all right, cool, this is the confirmed low. Price will not breach this low. Like a change of character isn't enough anymore. Okay.
What I usually have in my trading is mantras for myself, different sayings I have that I've just thought of, and I constantly repeat them to myself. One of my favorite ones is a restricted trader is a profitable one, meaning to say I like to have as many restrictions in my favor, because I know I'll forgo a lot of trades and I'll miss a lot of okay setups, but I know when I do take it, I've got so many limitations that it's the best odds I can have. And what I'm seeing in your model right now that you're mentioning is it's very restricted and very consistent. It's not one day your TP is going to take you 3 days, the next day it's going to be 3 minutes. There's consistency in basically every maneuverable metric that we have. Is that something you did by design, or is
I purposefully chose that approach because now that my life has gone quite busy, I've been focusing on a lot of things outside, as well as part of the whole Forex journey of focusing on content creation, of course, building a few technologies around the industry. So I'm very time restricted. So I don't have that flexibility anymore in terms of my psychology, especially. Like I can't be in an open position and be operating 3 different tasks at the same time, whilst in the back I'm thinking, all right, cool, what's going on? And I just got an alert, check up on the trade. Now I like to be very session based. So I'll trade London session and I'll trade New York session, especially the second to third hour of the opening of each session. And because of that, it allowed me to focus on trading when it needs to be. And then once I'm out of my trading hours, I focus on work. And then that's why I shifted from that previous approach that I had, where I was trading higher time frame and lower time frame, and I'll swing my position over to 2 days, 3 days. But the back of my head is always thinking about the position whilst I'm also thinking about work.
I see.
So trading each session and having a window for each one to trade allows me to be in and out. And then I focus on other things outside of the markets.
Makes a lot of sense. And when it comes to this specific model, which is a intra-session, looking for a continuation kind of thing, that model, is it overlooking higher time frame completely? For example, if the higher time frame, or not even higher time frame, M15, M30 is bullish, will you still sell?
Yes.
Okay.
Yeah.
So you're disregarding actually everything
Disregard
above.
higher time frame.
And everything's on M5.
Everything's on M5.
Okay,
it's
how
strictly
interesting.
on 5.
Okay. I've said these kind of things before, and a lot of people will just get confused. So I want to hear it from your perspective, because I've said from my perspective, which is I've publicly said higher time frame is important. Higher time frame is a guide, and higher time frame is like when you're learning to ride a bike. You have your training wheels, your stabilizers. Once you're competent with your higher time frame and you can get down to lower time frame and be proficient there, you can remove your training wheels and start to ride a bike. And for the longest time, I'll be honest, I look at the daily time frame for a quick glance, like no longer than 30 seconds.
That's exactly what I do.
4 hour quick glance. And then M15 and below is where I'm really studying and doing my analysis. Because I know if I have a H4 impulse bullish and I'm sitting in the middle of it, well, just to come to that demand area or make a new higher high, that's the next 2 weeks of price action.
Exactly.
I'm more interested about today's London session. So I don't care where the rest of the week is going. So then I disregard it all and I get all down to M15 supply zones, M1 price action and entries. And I've been specific to that. And a lot of people are like, oh, but then you're missing all the higher time frame information. You'll get lost, M1 noise.
It's not true.
What is your response to that?
When it comes to trading higher time frame, especially when it comes to trading higher demand and waiting for discounted and premium levels to tap into, like you said, that's could be 1 to 2 weeks worth of price action before it delivers into your POI. Now, one, you can't be waiting that long to execute a position. Two, price doesn't always fill in that inefficiency on the higher time frame. It could be months before it fills in into that premium and that discount that you've been waiting for on the higher time frame. So it's what's in the lower time frame that's quite important, because you can trade to that discount or trade to that premium. That premium that you're looking to sell from on the higher time frame. Yep. So that's why it's very important to understand where price will follow on the higher time frame, but it's where you're scaling on the lower time frame that matters, because it allows you to be in and out throughout that move. And there's nothing wrong in capitalizing in that entire move into your area, where you can then look to wait for that distribution of your premium supply and then sell it off. There's nothing wrong with buying up into that point. For example, fundamentally, and even from a higher time frame perspective, I'm short GU and EU. I'm waiting for price to tap into 4-hour extreme supply to look to wait for that distribution to sell off on lower time frame. But people ask me, why am I buying EU if overall, fundamentally, I'm looking to swing GU? Okay?
That's a long-term bias.
But by the time price, I'm sure you saw GU's price action, there's that specific 4-hour high that I'm waiting for price to induce to tap deeper into some inefficiencies and into that area of supply. So I'm buying into price, taking out that liquidity, filling in the rest of the inefficiency, tap into that premium and then sell it off. But there's nothing wrong with buying up into that point.
It seems like you're valuing trade frequency, which is the reason you've done this, because you also, I haven't got into it, but we can in just a moment. You have probably another model which is more higher time frame, maybe fundamentally aligned, and maybe more intraday to swing. Am I correct in saying so?
Yeah.
So before we get into that, out of interest, do you have a preferred system, where it's the intra-session fixed M5 or the higher time frame aligned, more swing trading?
Fixed M5.
And why is that?
It's a lot more straightforward. There's no complexity to it. It's as simple as you get a break of the first hour's range that gives you your direction or bias. You wait for a pullback into your supply or demand, execute based on that. That's literally all there is to this model. And of course, you have your A setups and your B setups. For example, the A setup for me would be London, first hour of London takes out Asian high, for instance, and then we get the second the second hour of that range, price ends up closing bearish outside the first hour. Wait for the pullback into supply, we target Asian low. The power of, people call it the power of 3, or so on and so forth. But that model for me is the A+ setup. B+ setup, sometimes we completely ignore the fact that the Asian session liquidity, for example, today's EU longs, price ended up closing bullish. It also took out Asian highs. Asian lows wasn't taken out yet. But because we got that bullish break against the first hour, that was still enough for me to say, all right, cool, we're buying. We got that pullback into demand, that breaker block, 2 candle rejection, we market executed buys, targeting previous highs. So it's a very simple, strategic and systematic approach. Yeah.
How long have you been trading this specific strategy?
Almost a year.
Okay, and talk to me about certain numbers of like what's expected win rates, what's an average risk reward. We know, is it literally a daily thing that can happen?
Literally day in, day out.
Okay.
Do you mind if I show an example? Just for clarity?
Yeah.
For example,
visually I'm following, but I guess some people need to see something for them to imagine it.
Okay. So, for example, which camera shall I go towards?
I guess it'll be this one right here.
Can we zoom in, or shall I go to the camera? That should be fine, right? Okay,
yeah.
So I'm going to zoom in a little bit. So, for example,
this you're the first guy in Titan tomorrow that pulled up a chart. I'm glad someone finally did it.
This is the Asian range.
Yes.
Correct? Now, this is the first hour of London Open. So this is the first hour's range that took place, okay?
And what I'm seeing right here, I want to hear your comments, but it took an Asia high sweep and then started to have a bearish push down.
Yeah.
And even given a bearish break of structure. So smart money traders, no doubt, are looking to sell at that.
From the supply, targeting Asian lows.
Yes.
That's something that I didn't do. Why? Because I haven't had a confirmation yet of a bearish close or a bullish close. So this is the range high.
Yes.
And this is the range low.
Got it.
On the first hour of London. Okay. What ended up happening? Price ended up closing bullish outside of that range. So that wick wasn't enough for me to say we're bearish. I need that body close against the high or the low.
Okay.
We ended up getting a bullish close on the high. As soon as we got that bullish close, I marked out this breaker block that we have right over here, which price tapped into. And we haven't had a market structure shift up until this point over here.
Okay.
As soon
so
as
it's a
we had
bullish
that
switch on M5.
On M5,
Okay.
yeah. So price is still ranging within this breaker block. As soon as we had that shift from this high,
yes,
price pulled back into that demand. We market execute, stops at the wick low.
And of the breaker?
Of the breaker? Okay. No, sorry. So as soon
of
as
the breaker or the low of that consolidation?
So you see how price is reacting at that breaker?
Yes.
As soon as we had that shift, this is now the new price range we're working with from this low to that high. Pull back into this demand right over here. I'll make that a lot clearer for you. As soon as price pulled into that demand, we market execute our buys with stops at that wick low.
Got it.
And we got that 1 to 5 for today.
Boom. And what were you targeting towards the high?
So for me personally, at a 1 to 5, I was out of the position.
Okay.
So
was that because you capped it at 1 to 5, or was it based on something you saw?
I saw £10,000 and I ended up closing that position. Fair enough. This was my trades for today. Those were the EU buys that were taken. So if I go on the chart and take out trade history, you can see that was the market executed buys as soon as we got that pullback into the demand. And we exited at 1 to 5.
There we go, bro.
Very simple.
Well, this podcast was not planned to be on a day you took a winning trade. This was just, I called you up and we made it happen. And there we go. Beautiful to see, my bro. So why have you now, knowing this, you've got a very mechanical approach, a very restricted approach, a very systematized, very rule-based, very consistent, all the things I love to hear. You're speaking my language. So why do you still have a discretionary higher time frame fundamental approach? As a trader, it's very simple. You have to find an edge and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data. And TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your back testing tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting it on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need. The correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it. And probably you'll be using it for years to come. Now, I'm sure you already know the new collaboration that I have with my team. Let me just drink. Sure. So yourself, are you a technical purist? Yeah. So you're not collaborating with gentlemen that are fundamental purists. Exactly. And that hybrid has birthed a new model. Okay. A new model. Exactly. For example, for instance, on Friday, I took longs on gold pre-NFP. That's the trade. I don't know if you saw my story, but we've done good returns on that. We made 12,000 on that day. I took longs on gold. Why? My mentor, Mark Fraser, which is now my partner, he said we're looking to go short on the dollar. He said for NFP, we're looking to go short on dollar 4 hours before news release. He gave his fundamental reasonings behind that. I aligned my technicals. It made sense to be long gold. So I long gold based on the idea that we're short on the dollar fundamentally. And technically, I can see why we're buying dollar. Price tapped into demand pre-NFP. We got in buys with protected stops. Ended up delivering that £12,000. And would you take this fundamental bias and add in the same technical model, or would it be a... Exactly. So exactly the same. It'll be the exact same technical model that I have. Align it with the fundamentals that was given to me. Yes. Put them together. And because it's a little bit more fundamentally driven, would you therefore modify the longevity of the trade, saying, okay, hold it for a week? Or exactly. Okay. I'll give you an example. Only my members would know this, but we've been calling pound against the Australian dollar shorts for the longest. I'm going to take out my charts one last time. This is the last time I'm going to take out my charts, but it will make a lot more sense once people see it visually rather than me just speaking about it. I love how you brand everything. Even your phone is the black and red. I just love the color red, honestly. Yeah. There we go. Pound against the Australian dollar. We're going to go straight into the 4 hour and you guys are going to see. So are you allowing yourself to trade basically any asset class? Pretty much. Okay. Pretty much. But predominantly I focus on GU, EU, gold and NASDAQ. That's it. Okay. That's my main focus. And for this 5-minute model, because it's a time-based thing, do you do it on, or what pair do you choose? Or does it change day to day, or is it a fundamental driver that aligns the pair? No. So NASDAQ
I only trade in the New York session. So when I'm using the 5-minute strategy, it's not for London. It's only for the first hour in New York. For gold, it's both London and New York, and same for GU and EU.
Okay.
Now for G8, this is on the 4-hour time frame. Now look at since when we've been calling shorts from fundamental point and technical point. So I'm going to zoom in now. There we go. You guys can see that? Cool. So we've been calling GA shorts since 1.95.
This is a 4-hour time frame?
This is on the 4-hour.
Okay.
So when we got into these shorts, it was very, very simple technicals. This is the way every SMC trader would trade, and it was very textbook. This is something I execute without the 5-minute entry model.
Okay.
Very simple. Price induces this high. As soon as you had an inducement of this high, price shifted to the downside, taking out that low. That was our market structure shift. Price ends up pulling back, engineering liquidity below this level of supply. Price ends up rising to the upside, taking out this liquidity, tapping into this premium on the 4-hour. This is a textbook setup for me from an SMC perspective. And not only that, fundamentally, we were looking to short pound against the Australian dollar.
Okay.
So when Mark and Drew, my partners, the fundamental traders, had mentioned to me that we are looking to short the pound against the Australian dollar, and my technicals aligned with that bias as well, was we market execute from these sells all the way to the downside. Had again, breaker structure, price took out liquidity built up, price ended up pulling back into this level of supply. And then look at that, ended up selling into our TP1, which was at this level, and TP2 being at 1.87, which is still a position Mark and Drew are holding. But me personally, I was out of that position at TP1.
Okay. Yeah. When it comes to fundamentals, technicals, supply and demand, all of these kind of things, what would you say are, for a trader that's not profitable, what are the most important things to focus on?
Well, it all really depends. Like if I brought Mark and Drew here, they'll tell you dabble into fundamentals.
Okay.
But me personally, my experience has always been technicals, as that was the easiest to understand for me at the time, just because I didn't have access to the correct fundamental education. Now that I do, is completely different. But what I would say is, if you are a beginner and you are looking to get into the markets, just understand price action to the T first, so you understand why price is doing what it's doing from a technical level. And then once you dabble into fundamentals after, that's when you'll get your aha moment. Because now it's not only, candles are closing bullish and bearish to dictate your bias. It's, all right, fundamentally, X, Y, and Z is happening. So now you're going to align your technicals with the bias that's actually happening from a fundamental look.
Amazing, bro. So this 5-minute strategy, have you given it a name?
No, just call it 5-minute
let's
strategy.
call it the 5-minute strategy. You've been doing it for about a year. If I may ask, roughly, how much have you made using this strategy alone?
Oh, honestly, I couldn't put a number to it. Like it pretty much varies because, like I said, I trade not only this concept but the higher time frame concept as well. So I can't really say how much I'd make. But in terms of the actual data collected, I average anywhere from 50 to 60% win rate using the 5-minute strategy. Okay. And as for average risk to reward is 1 to 3, 1 to 5. That's based on the 5-minute strategy. Now, as for the higher time frame strategy, my win rate is around 30, 35%. But as for risk to reward, we're getting into 1 to 8, 1 to 12.
Have you found with the two systems, I want to draw now a parallel of the two systems and the associated psychology. So because the 5-minute strategy is a very mechanical, rule-based system, it doesn't require much real thought or opinions or greed. It's a very, if it fits the rules, go for it. If it doesn't, no trade. And that binary approach probably leaves not so much room for real psychology apart from maybe the generic FOMO and a bit of these kind of basic ones. Whereas the other system, which is very higher time frame aligned, a lot can happen. You can face a 5-day retracement, all of these things. Emotions come in, drawdown, you could be in drawdown for a week, all of the associated emotions. Have you found having a system that is very objective and mechanical and therefore removes an element of psychology has helped? Or do you think dealing with psychology is the best way?
Most definitely. And that's why I made that shift and had the balance between the two systems. Is because, like I said, especially when I'm flooded with a lot of work outside of FX, when it comes to trading, I don't want to be too psychologically involved in the market. I want to be in and out. I want to have my rules set. If price ticks off my boxes, I'm in. And if it hits stop loss, if it hits take profit, I'm in and I'm out. Simple as. And as for the higher time frame approach, I'm holding that position. I don't know what the position is doing halfway through me being in the middle of something else. And then at the back of my head, it's like, checking your position, see what's going on. Are you happy with the returns? Consider closing it, partialing out, de-risk. But when I'm trading each session, I'm in, I'm active. I know when I'm in, I know where I'm at. Simple as. So it's like you said, it's a lot less on the psychology because it's very mechanical. And because it's very mechanical, there's a lot of thoughts that goes into it.
You know, it's one of the biggest debates in the trading community, which is some people say trading is 99% technicals. Others traders say trading is 99% psychology. Where do you fall on that spectrum of technicals versus psychology?
Oh, back in the day, I would say I was 80% psychology and 20% technicals.
Okay.
Now it's completely different. Now I would say it's 50-50. Honestly, it's 50-50 because the only reason why your psychology will take a toll is if you're not confident in your technicals. And neither can it be 80% psychology and 20% technicals, because if your 20%, if your technicals is garbage, your psychology will take you can't control your psychology when you have horrible technicals. So it's pretty much 50-50. If you are confident and you have good technical analysis, your psychology will be in line with that. So you can only be as good. How can I phrase it better?
How about your psychology can only be as good as
your technicals and your system. Yeah, exactly that. That's the perfect way to put it.
What I've found for myself, at least, is I haven't sat down for weeks on end trying to study my psychology.
Neither have I.
Reading books or whatever. But I've just found, first of all, a stack of evidence of backtesting and collected trades has brought me more reassurance than anything. So I know that if I've taken 1,000 trades like this, what's 1,001 going to be? I don't have that FOMO. I don't have that emotion. And I think a lot of things can be solved by technical competence, and that's just time in the game, as opposed to what I see traders doing is they bounce from technical strategy to another. Nothing really sticks for them. So they scapegoat the whole situation and say, must be my psychology. And now you end up in a long-winded route trying to fix your mind on a flawed system, and that's never going to gel.
Exactly.
And that's my personal anecdote, and probably for yourself too.
I completely agree.
You solved your technicals and the psychology followed through.
Got better, yeah. Because once I got confidence in my approach to the markets, naturally my psychology got better. I didn't study psychology. I didn't have a psychologist to help me. Neither did I study psychology in terms of how trading affects my psychology. I didn't dabble into any of that. I just naturally got more confident and less greedy and less fearful in the markets because of how confident I became in the system that I had. And because of the data that I collected. Now, data is everything. So if you know you have something that wins, why would you be fearful of a loss?
When you've got this mechanical M5 system, I've had a trader on the show who said if trading was so easy and if trading was really that mechanical, and you gave that same system to other traders, which as you have, and everybody has a different performance, the only reason people can deviate in performance on a systematic approach is psychology and psychology alone. Would you agree to that?
I completely agree. Now, for instance, the individual circumstance also plays a big role in that. What is he going through day to day? What is he struggling with? What pressures does he have in his life? You can't compare someone that has no responsibilities and no pressure to someone that has all the responsibilities and all the pressure. There'll be two completely different traders, completely different greed, completely different fear in the markets. This guy might be more risk averse, but more greedy. This guy will be less risky, but also less greedy.
Of course.
Two different people, two different lifestyles, two different psychology. So profitability system is one thing, but the trader himself is the next. It's what you're going through day to day. What are you struggling with? You can't bring your life problems over to the charts, because as soon as you bring your life problems to the charts will give you another problem. You know. So
when it comes to this psychology topic, I'm in agreement with everything you've said, and I do believe it's imperative, if you're not in a neutral state, if your psychology is of a healthy, sound mind, I'd say work on your technicals. But if you have anchors, for example, your parents are immigrant parents and they've always struggled with debt and these kind of things, and you've been born in that household, you're going to have that in you. You're going to be a bit more risk averse, whatever. Whereas if you're in a carefree environment, it's going to be a different environment. If you've got debt on your own shoulders and kids and 3 jobs versus you're a student, it's a different situation. So
I agree.
We can't just say level the playing field. It's obviously individualistic. And one thing I looked into was maybe you've come across Maslow's hierarchy of needs. It's like a pyramid where a lot of traders, I believe, are stuck at the bottom because those traders that are coming to the markets to solve money problems, that's why everyone enters, is because they have money problems. Usually trading was a vehicle for the affluent, the rich, the high net worth individuals have a family office and a diversified portfolio, and they started to trade. Whereas now it's people with debt, and that's not usually how it was. So when people are coming into the markets and they're struggling with the basics, rent, bills, basic needs of shelter, and you're now coming to the market, you're very low on this Maslow's hierarchy of needs, and that is significant anchors in your trading, I believe. But as you ascend the levels of Maslow's hierarchy of needs, that's when you remove these anchors in yourself and then have a better time in your trading, I would believe. Coming to your situation, I want to tap into it because you were maybe the youngest guest I've had on, and you've achieved a lot at your young age, and that's probably a whole whirlwind of things because your peers, your school friends, and probably are at university now, they're not living the life you are. And now you've got a life where not only thrown into the limelight on social media, but obviously the lifestyle, I want to call it, where you have the nice cars, you have the nice watches, you're doing property investment, all these kind of things, but you're still not legal in Dubai, actually, which we were laughing about. The legal age to buy and sell really is 21, so you had to do it through your father and so forth. Meaning, say, achieving the things that you have achieved at this young age with the peers around you not doing the same, how has that felt like?
Honestly, it's not something I've been given too much thought about. Especially with the people around me, they haven't... Okay, let me phrase it like this. All the people I was surrounded by before I had any of this wealth, it's quite weird because I had this conversation with a friend of mine not too long ago. He was saying, Zain, when I'm looking at you now, I'm not even surprised. Like, everyone that I was surrounded by, as weird as this sounds, they knew Zain was going to be something. I guess it was because of the way I carried myself even before I had money. I was always that confident kid that was out there looking for something to do with my life. I was always on it. That's the way to put it. Is when I was younger, I was always
hustling.
I was always hustling. I was always onto something, whether it was eBay, whether it was reselling, whatever it was. As soon as I saw an opportunity, I would always take it. Like,
so as a result, were you not really focused on school? No. Okay.
No, honestly. When I turned around 15, 16, to be honest, I was making good money. I'll be very honest with you. When I was doing eBay reselling, I was in the 5 figures at that point. Okay. Even when I got into Forex, I didn't get into it like completely broke. I got into it with good money from businesses that I built prior. Not crazy amount, like low 5 figures, but I got into the industry with good money. So psychologically, I was pretty good from that aspect. And because people around me already saw some sort of wealth coming from my businesses, when I got wealthier, it was like they knew it was going to come. So I never had that thing where it was a shock or my circle started to move weird around me because I got money.
Do you think that was an advantage? Because I think most traders are in the opposite situation where their friends think you're like, oh, you're trying to be some trader now.
Exactly.
Like they alienate you.
I didn't have that.
And you had a supporting environment.
I had a very supporting environment from my family all the way down to my friends. I never really had anyone being not supportive or hating or none of that. Everyone was pretty supportive of the way I was. Like I said, everyone kind of expected it, which I don't know what it was, with the way I carried myself maybe, but when I got to the level I am at now, everyone's like, bro, I expect this. It's not a shock to me. Okay. You know? So, yeah, alhamdulillah. I guess it's a good thing. Yeah.
I had another trader recently on the show and he was just 1 or 2 years older than you. And his story was similar. He was started to make money at a young age. And his reflection on himself was along the lines of, I had people doubting me. So I wanted to prove them wrong. And that was kind of a fuel for him. So the moment he did find a little bit of success, the first thing he did, as every probably trader wants to do or does, bought a Lambo. And he said that feeling of pulling up to his school and showing, it's a small town he was in, so showing everyone, I got this Lambo, it was like the whole school's looking, everyone's taking videos, and he felt it was like, I'm the man, I made it, like this is what I wanted. And then moments after, or years after, or maybe a couple months after, he realized, well, he's just fueling his ego, took a step back and corrected the situation and so forth. Did you ever have that external validation high that you wanted to show people because of the background you were in?
No. Okay. I never really wanted to or needed to, or I would never do something for the sake of someone else's validation. Because like I said, when I was young, I would say I was overly confident. The only reason why I was overly confident was at 15, I can show you pictures now. I was the whammest 15-year-old
Oh, I remember.
in the
I
whole
remember you
of
were jacked
fucking
and
Wembley,
shredded. Yeah,
bro.
yeah, yeah.
I was wham shredded.
Where are your genetics from? You got some blend, right?
The Syrian genetics, bro.
Syrian
That's
genetics,
genetics
bro.
just different. But bro, when I seriously say at 15, I was probably the biggest in the entire Wembley, sorry, where I grew up in. I really mean it. So I guess the confidence came from knowing that I'm the biggest and the strongest in my area. So the confidence came from there. So I always kind of had that confidence within me. Plus the validation was already there. Like people say, "Oh, Zain, you're strong. Oh, Zain, you're wham. Zain, take me to the gym." Da, 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 da. I'll do PR competitions with people older than me. So we'll all go hit up the bench press. I'm benching more than people 2 years older than me. Like it was those little, like all of that validation was already given to me from young. So I never really needed to seek it. That's where the confidence came from. I was already like quite known in my area. So I already had that external validation, I guess. So when I had money on top now, I didn't need to look for more validation. I already had that validation from the people around me. I know the people around me love, support, and care about me. So I never really needed to go out on my way to impress this guy or that guy or flex on this guy or that guy, you know?
Yeah. As I approach the end of my 20s, I'm very envious that you have a full decade left of you in your 20s, especially in the situation you're in. You've achieved a lot, but it can also be I don't know, I can imagine maybe also like, what do I do now? Or what's next?
Yeah.
Knowing you have time on your side. So what is next?
Honestly, I don't know how to answer that. I haven't really been given my long-term goals too much focus. I've been quite focused on my short-term goals. I like operating that way. I don't know if it's a good or bad thing, but the way I've got to the level I am now is by focusing on the next month or the next 3 months rather than focusing on the next 5 to 10 years. So I like to take month on month. I'd like to build my goals month on month. And the shift that I want to take now, I don't know if you've realized, but I've kind of backed out of the education space at some point. And then when the collaboration happened with my mentor, I was like, okay, hold on a minute. There's no point of completely providing value to my audience. I can continue to provide value to them, but allocate the workload over to the team rather than me focusing on educating all of my students alone. So when I closed my academy completely, my mentor, Mark Fraser, and his partner, Drew, came up to me. They were like, look, Zain, we see a gap in the market. People don't really combine fundamentals with technicals. You know we're top tier with fundamentals. We know you're great with technicals. Let's put together an academy. They took over majority of the workload. I do 2 live calls a week with the members, get active in the Discord. That's my only workload now with the community side of things. So now that I've shifted away, even like I always talk about the money generated, the revenue generated from the academy. I don't know why a lot of traders don't talk about it, but it was actually a big catalyst to my trading success, which I'm very grateful for. Because, for example, when I got into FX, I got in there with low 5 figures, okay? And scaling into the 6-figure level, because I went down the personal capital route, I didn't go down prop firms in my beginning. Because in my beginning, when I started off, it was just FTMO and the other prop firm that ended up going down. I'm not
MFF.
sure, I can't remember that. No, it wasn't MFF. No. Back in the days, there was one called...
was it the one run by a lady?
It was run by a lady. The one that Yerimi had an issue with.
Yes, I forgot the name now, but I remember.
I can't remember the name, but when they went down, that's when I was like, yeah, like prop firms never really had that reliability to them. So it was never something I dabbled into because money wasn't an issue. I'll be very honest with you. Like I had money, I didn't really need capital. I was like, cool, I can scale this and compound it. So when I started trading multiple 5 figures, slowly compounded that through trading. And then I also started to promote my stuff on Instagram. I'd get 1 DM, then it became 10 DMs, then 100 DMs, people needing my service, blah, blah, blah. Then I started to open it up a one-to-one service, scaled that, was taking too much time on my hands because I was still balancing school and trading and the one-to-one session. So I couldn't do that. I ended up closing one-to-one. And then one day I decided to open up my academy and just put a video onto a website and then have a Discord. And then that ended up scaling to a multiple 6-figure business, which also reflected back into my trading account. So the inflow was, I was already compounding my multiple 5-figure business trading account. And then I was also building a 6-figure education company that was flowing also back into the trading account. So that was my growth and my story in terms of FX. Now, where was I trying to lead with this? But yeah, anyways, so
it's more saying moving forward. So
yeah,
we know kind of. Well, it's actually interesting that you also are saying in such a way that you made a lot of money from education,
oh,
but you
100%.
used it back into your skill set to then
Exactly.
Compound it out.
Yeah.
So sitting at whatever account size you may be at in the 6-figure realm is now the name of the game capital, or
Yep,
what are you
capital.
trying to do?
So for me personally, where now that I'm less focused on education, what I'm trying to do is collect a lot of private investors, and I'm looking to connect them onto a copy trader system. So I've spoken with some of the owners at Vantage, which is the broker I trade with, and they built a platform called V Social. And what I'm trying to do is work with my investors to deposit money into their account. I don't manage that account for them. The way I do it is they simply deposit into their own Vantage account. They just copy trade it onto mine. The risk is already calculated through the platform. I place the trade, it copies it over to their trade, to their accounts. Whenever they decide to withdraw, automatically my 30% performance fee is sent over to me. So it's not something I have to chase, I don't have to invoice, nothing like that. The second they withdraw, 30% gets sent over into my trading account.
And I guess because you're not taking the investment,
I'm not taking
you don't
the
need
investment.
any regulatory stuff.
No. Because it's a copy trading system. They sign the terms and the conditions of the platform that I'll take 100% reliability once they connect that account over to my master accounts for them to copy trade. But yeah, that's the shift I want to go towards, is to start managing my circle's capital.
Okay.
It was not something that will be open to the public. It will be my close friends. I have pretty much a very good network personally of high figure individuals. So I'm looking to put them together, get them to deposit their accounts, and then I have it connected to my master account and trade it.
There you go, bro.
That's the shift.
Well, Zain, I'm excited to see where you go. You got a lot of time and already achieved a lot. So, and it's also very apparent how you carry yourself, the work you've put in, just the way you were able to answer certain technical questions. I would be honest, not every guest can. So it's a testament to how much work you've put in behind the scenes. So, bro, thank you for the conversation.
No
and
problem
hopefully
at all.
the ladies and gents behind the camera enjoyed it too.